Well, it's been a while since I've put out one of these Sunday evening fireside chats, and certainly thought it was about time to do so since we've had some volatility here in June. Certainly, April and May were terrific months, and June also started out in a similar fashion in that it was rallying very strongly, and then we had a horrific one-day downturn, and then some recent downturns this week. So we really had June seeing it trade effectively sideways for the month, but it's been a terrific quarter so far, and it kind of goes to show you that you just can't time the market. There's no possible way. Just as everybody was their most pessimistic, the stock market started to look forward. And I sent out a blog, why is the market going up now? And certainly it's going up because the stock market is looking forward. It's realizing that there are some very good things that are happening from the Federal Reserve standpoint and from the fiscal stimulus standpoint. So we have good monetary policy and we have had good, sound fiscal policy. And it wasn't really the Federal Reserve using a bazooka. It was a nuclear weapon that the Fed dropped onto the economy to help it. And the Fed, the Federal Reserve has a couple of periods of time in history when they can learn from the mistakes of the past. And certainly during the Great Depression, we learned with a lot of what FDR was doing in terms of the fiscal policy. It was in fits and starts. And what you heard during that period of time too was a lot of, kind of like now, where there's a letter sent to the president by very fiscally conservative people saying, hey, we got to ease up on this. And that fight went throughout the 30s, and we actually had the Federal Reserve raise interest rates too quickly during that period of time. And what happened was that caused a delay in the recovery. It was the same thing with a lot of public works programs that were, some of them that were good, and then were stopped in fits and starts again. And it just took a long time for us to get through the Great Depression in 1937. We kind of went back into a downturn. The financial crisis also took us some time to act, and Congress, after some tremendously volatile days, finally acted, and the Fed was using some new weapons in its arsenal to help out the economy. And what the Fed was able to do this time was pull out that playbook and put it into place very quickly, and then implement some new things, buying ETFs in the marketplace. And you're seeing that work, and that the market quickly realized that we don't know when and how long this recession is going to last. It's impossible to know. But it realizes that at some point it is going to recover, and that what Congress has done has been effective and helpful to smaller businesses and businesses in general. Not perfect, and there's going to be more to come. What I do know from a political standpoint is that the Republicans clearly do not want to extend unemployment past July. And that's going to probably help, actually, to incentivize people to get back to work. One of the things that's been floated by Republicans in Congress is an incentive to pay workers $400 a week if they find work, no matter what work that is. So that would be very good and a positive thing, and that would be something that probably Democrats and Republicans can get behind. It's going to be difficult in a political year, though, for Republicans and Democrats to want the other to look good at all. And that's part of the sadness of being in this political year. But you've seen them work together in extremis at this point in time during these last couple of months when we knew that the economy certainly needed help. And I think you'll see them come together again on certain important points with a second stimulus if it's needed. And there'll be some debate about that also. Right now, the stock market is certainly trading on one thing and one thing only, and that is good news or bad news based upon COVID. Whether or not we're going to have a vaccine, or whether some of the things are working to help people. Certainly, there's a lot of news about the additional, with all the extra testing that we're doing now. I mean, I've been tested twice now, and it's just something that's going to be easier to get, and of course more people are going to pop positive. We certainly, my daughter Hannah certainly had it. She even had the COVID toes and everything else, and I don't know how the rest of us in the house didn't get it. Maybe I did, maybe I didn't. But these things are going to be, it's going to be a daily event, and the news is going to be exacerbated by the stock market on a positive or negative side. Everybody likes it when it goes up and we have positive news, but doesn't like it on the down. But it just stresses the importance of being a long-term investor. You can never gauge what's going to happen in the short term. The nice thing about our companies is that the dividends have remained steady for us through this period, and I suspect that they'll continue to be. These are companies the companies we own, whether it's Starbucks, McDonald's, Coke, Pepsi, have paid increasing dividends over very, very long periods of time. And I've structured the portfolio so that income remains stable for you and what I believe to be companies that will keep paying. On the bond side, we've seen that with the Federal Reserve acting, even in the high yield market, what's happening is they're kind of coming in there like an elephant and stamping around. And by doing that with on the ETF side, they're not buying so much of the individual bonds and some of the smaller ones that we own. So we haven't seen the recovery in price in some of those bonds. And the question always comes down to, even if the Fed is buying it, is the solvency of that company. Will they or will they not make it through this difficult period of time? Some will and some won't. Certainly we've seen like Chesapeake Energy declaring bankruptcy recently, Hertz Rental Car, and others won't make it, and we'll certainly lose some, and that's why we own as many as we do. We're not going to get the 12, 14, 16% returns. It's possible, but not probable, that we'll do it, because it's more likely that we're going to have some defaults, especially in the retail sector as changes occur. But it's important to remember that right now we would get a 0% return from cash. It's 0% if you move it out of the stocks that we're in. It's 0% if you move it out of the bonds that we're in. And as difficult as it is, you have to really be patient in times like these to kind of weather the inevitable storms that come with investing. And it's not easy. I'm an emotional person. Most people don't know that. They think I'm always, so calm and steady. And I think you need to be when you're investing. You don't want to act on your emotions. If you feel nervous, that's probably good for you to sit on your hands and not invest at that time. And if you feel like exuberant, you probably should pull back a little bit. I feel the same way about all these MAGA stocks and FANG stocks that have just gone through the roof. We saw this during the tech bubble of 2000s for a lot of these companies that have unrealistic valuations. That's happening a great deal now when people are going back to the stay-at-home stocks very quickly. The Facebooks and the Googles and Microsofts that have and Amazons that have done well during this period of time, but certainly pay lower dividends. And I think we can get hurt by those valuations. So many great companies have not participated in the recent rally or are still down very much this year, and I believe their dividends to be sound. So those are the types of companies I believe that we should be investing in right now over the long term. It's often, I'm a very competitive person, and you always want to beat a particular index. And we've certainly done well over the last 2+ decades of doing it. But invariably, when you're a value investor, you're buying things that are hated, and sometimes you're just waiting patiently while getting paid your dividends for that price to realize its full appreciation potential. And it's often alluring to kind of go after this thing over here that may be sexy and sparkly. And certainly if you have a play account or you want to talk on the golf course with a buddy about that type of particular stock, go ahead and buy it. But don't ever invest any money that you're willing to lose. So expect that there's going to be this continued time frame where the market is rallying or selling off based upon virus news. Now, as far as the virus goes, we're going to be living with this thing for a long time. And it's just probably similar to the flu. Even if we have a vaccine, not everybody will get it. It's going to take a while. It may not be completely effective. You still may get it, but it may not be as dangerous or as harsh if you do get it. And it's going to take some time to get it. I've recently flown to Iowa. The planes were about 40, 50% at capacity on the way there and the way back. And it's certainly safe to go about life. Mask is a big debate. If you're in a crowded area, people are going to be safer wearing masks, and it's going to take time, of course, for people to get used to this new reality of living as we slowly open up states and open up the economy again. but there's going to be these flare-ups. It's just going to happen. And, we won't know, and we may never know which method was the best. Sweden's death rate has been similar to ours as a population. And some states have been. Some states have opened wide up and they haven't had flare-ups. And some states have stayed fairly clamped down and still are dealing with the issues. The political news will push one agenda over the other, and it's going to be difficult for you to do so, but you have to tune that nonsense out and think to yourself, what impact does this have on how many hamburgers are consumed in China, or how many Pepsis or Cokes are consumed in India? And if the answer is very little, then know that you're probably invested in the right types of investments. So don't worry about the day-to-day news. And I just jotted a few things down. Again, performance and international has certainly been a big lagger, as well as value and as well as some of the high-yield bonds. It's important to have that asset allocation. For years, if I had perfect hindsight, I said, we'll go 100% stock over a period of time. Well, that's not prudent, right, to do, because there's plenty of times when the market will sell off 50% or 35% like it just did, and that could be decimating to a portfolio. Or people will say, like, geez, why are we invested in Nestle or Unilever or any of these international companies that we're invested in when U.S. stocks have done so much better? Well, the likelihood over the next 5 or 10 years is that those companies may do much better. And it's important to have a balance. Both our international and U.S. stocks right now are paying around 4%. I think the valuations are very attractive on the companies that we own. We've been adding to our equity allocations. We bought this week too during this little recent downturn. But again, it's foolish to try to gauge where the market's going to go in the short term. Just never a believer in that. You have to invest long term. You have to think out 5, 10 years out into the future. Otherwise, you're never going to be a successful investor. From the politics side, this is going to be a very political year. I know many of you are pulling for one or the other parties, and it's a very passionate argument. And I think that even the worst case scenario from a capitalist standpoint would be a sweep, a Biden victory and a Democratic sweep, and they maintain the House or increase their tally in the House and gain control of the Senate. However, that being said, the same fears were expressed by many of our clients during the time period when Obama came into office, during that period where we had full Democratic control. Of course, Obamacare came into force, and our portfolios performed very well during those first 2 years. So taking a historical standpoint, it doesn't necessarily mean that. So you're going to be told, that it's the end times if something happens. Gridlock is usually good, and 4 months is an eternity for the political election to be held. So a lot can change between now and then, certainly in the market and the economy. So again, I suspect we've had this V-shaped stock market recovery. We could have a W. It could pull back down again. Your guess is as good as mine. But the economy, I think, is going to be very U-shaped. It's going to take a lot of time get this 20 plus million people back to work. It's not going to happen overnight, especially considering that we're having flare-ups. And the hospitality industry has been the most impacted, and unfortunately that's hurting the lowest income people who are going to have to change. Think of it in this way, that they're going to change from being working in a restaurant or working in a bar to going and delivering for Amazon a lot of times. And that's going to have a spillover effect, quite likely, for the broader economy and higher income earners as companies tamp down consumption. Expect that there's going to be less consumption, so they're going to lay some people off that are higher wage earners, quite likely, and we're seeing that in the financial services industry and in others. So that's going to be an impact also, and that's why I think it'll be U-shaped, and it's going to take some time for the economy to recover. But again, as far as the stock market's concerned, the stock market could continue to look forward. So as hard as it is, especially now without sports on television, try not to let the day-to-day news flow worry you too much. And as always, these are things that I worry about, and I know that a lot of you hire us just to worry about this so that you don't have to watch it day-to-day. So feel free, as always, to call at any time. I'm always working. Here it is at 10 o'clock on a Sunday night, and I got 3 emails today, and client, including Friday or Saturday. I'm talking to 3 clients yesterday. It's what I love doing. going to dial my boots on doing it. Hopefully 40 years from now, when I'm 91 or so, but or older, or much older. But take care of yourselves, take care of your families, stay well, and call anytime you need help. And we appreciate your continued trust. Thank you.